You're watching Closing Trades right here in ET now, and we're holding absolutely flat if you just take a look at the index. But that, I guess, is not the real story because lots really happening is under the umbrella of the large as well as the broader markets. Look at a Kotak Bank that's clearly cheering its Q1 updates. That stock holding up 3.5% right now. NTPC too has been a gainer, almost counting down to a 2% gain. Eternal as well, a mover today, 1.6% higher. And then Asian Paints, which is seeing quite a consistent move for the last 10 odd trading sessions, holding up 1% as we speak right now. BEL, after a day's break yesterday, it's back in the green, holding up nearly 1% as we speak. But what's under pressure? Titan. That's cracked hard after its quarterly numbers. 6% almost is the kind of downtick that you're seeing on that stock. There's Trent, which loses some more. Axis, Hindalco, Bajaj Auto, Maruti, Eicher, Bharti, ITC. A lot of large caps which are weighing heavy as well. So clearly just about a tug of war which is playing out in the market. But it's a lot better than yesterday. Yesterday too, we were pretty flat in the index, but it was largely solely FMCG, which was the gainer. That's not quite the story today. And to be fair, gainers like Kotak Bank in any case have a higher weightage than many other large caps within the index. So yeah, sectorally, pharma, chemicals, FMCG under pressure, new age, cement, realty, textiles, oil and gas to some degree. They are the winners today. But let's find out from our chartists what they make of the market moves. Narendra Srilanki is on the show with us. We also have Sharan Lani joining in on the studios. Sharan, hi, afternoon. Let me start off with you. Still quiet on the index. Do you still maintain the view that it's time to profit take?
So yeah, Aisha, my view hasn't changed. There's nothing changed. You are seeing very immediate sector rotation every day. FMCG is up one day, it's down the next. Today, realty is up. Maybe it'll be down tomorrow. As my top pick was IT yesterday, it was down. Now it's up today. So you are seeing very fast sector rotation. I think it's on back of profit booking. Even with a small profit, I think people are just getting off and entering new sectors. So my view for Nifty is the same. I think view is downwards to a sideways consolidation. It can see around 25,300 to 250 levels. And what I'm hearing, I think there can be a trade deal by today or tomorrow. And if that happens, it'll be a very positive thing for the market. And if the market starts trading about 25,600 on a daily closing basis, even for an hour be towards the positive side. But for now, till now, I think the trend remains down sideways to downward to around 25,300.
All right, so that's the take on the markets. Let's watch out for that. A range-bound trading session is what we have seen as of now. But with this, let's also welcome on Narendra Solanki. Narendra, good afternoon. Good to be speaking with you. Firstly, help us with your sense on the markets. It's been quite a range-bound trading session for the past couple of days now. But any sector that is looking good to you right now? Because a lot of sector churning is also at play.
Yeah, good afternoon. Yeah, definitely markets after giving a tremendous rally last month. This month we have seen some kind of a profit booking, and also since we are almost at the cusp of start of earnings season, and from tomorrow onwards the earnings would be starting. So I think markets are waiting for earnings seasons to start, and also markets are also waiting for trade deals to get over. So I think these two events would be further deciding the directions of the market and would be aiding the market in taking on further building on the trends, whatever the earnings comes for the overall markets. But having said that, I think not much have been changed in terms of sectoral preferences for us right now. Still, we like domestic focused manufacturing companies, infrastructure plays. Lately, we have started liking some real estate companies and defense, electronics manufacturing, production linked incentive kind of stocks, EMS stocks. So these continue to remain our favorite topics. And whenever the opportunity arises in terms of buying on declines, we tend to recommend our clients to grab those opportunities for medium to long term. So this is all broadly on a sector specific. And coming to the FMCG and consumption space, I think things are gradually picking up. with inflation coming down, monsoons looking good, and then Rabi season seems to be coming quite good. So I think festive season would be a big relief for the FMCG and consumption stocks. So one can start building a position in this space as well, looking for that kind of time period. So I think overall, domestic economic environment looks pretty much in shape right now.
Okay, and Narendra, just taking that point a little bit ahead and talking more about FMCG, the kind of quarter one updates we've received, and not only FMCG, if you take the broader consumption basket, barring Titan, nothing has been largely negative. It's all either in line or better versus what the street was estimating. What do you think FMCG in quarter one, what are those earnings going to look like? How do you think the sector could fare?
I think quarter one largely would be broadly in line. I don't see much surprise even on the positive sides, but I think negatives would not be there because the pressures would be easing out for most of the companies. So the margins would be stabilizing from here onwards. So I see FMCG companies' earnings improving from Q2 and most prominently in the second half of the current fiscal year.
Right, okay, that's the update coming in on Titan right now. Just looking at the texture of the market, like we said, at an index level, it's not a whole lot really, but lots happening within that. Snehi was just flagging off Titan's quarterly numbers. This Kotak Bank also reacting positively to the quarterly updates coming in. Antique has initiated a buy on AMCs, HDFC AMC, NAM India, UTI AMC. They're all the ones which are holding out well as well. In fact, they've talked about as to how the SIPS drive is going to lead to the structural shift in savings. And these three companies, according to them, are ripe for a re-rating and earnings may see strong sequential recovery, according to them. Kunal as well joins in on the show. Kunal, hi, afternoon. What is it that you're making of this yet another range-bound session and very quiet one at that?
Yeah, quite one, but today there's a change, Aisha, and I think many of the stocks have started to show signs of a good volume traction. For example, you've seen the banking names, you've seen a few of the financial stocks, sectors and stocks which you were discussing over the last few days. IT, there's been some pickup of price action which has come back into the real estate pack. Mild bit of short covering which is evident into few sectors. So that indicates that over the last few days, the markets were going through a bit of a grind. There was reduction of positions, but today it seems like that maybe the stance is changing a little bit more for individual stocks. Now, if that trickles into some sector trends, say over the next 1 or 2 days, then I think we could be in for a much more decent recovery for the index going forward. The strength in the banks over the last couple of days has been quite formidable, and this indicates that if the markets have to bottom out and show signs of recovery, or the sectors picking up trend, then I think Bank Nifty could be the one which could be the leading sector.
All right, that'll be interesting to watch out for. Interesting take rather coming in on the markets. But in some of the other movers today, I can see Delivery. That stock is up around 2.5% in trade right now. And I do remember it clearly back then when the company did come out with its earnings. It was indeed a very good set, especially on the margin front. But this time, all eyes on the earnings as well as how the e-com integration will actually take place and the synergies benefit kicking in. The commentary on that will be the key to watch out for. But Narendra, any take on this counter? Because when it comes to logistics, we have very select players, and Delivery as a stock mover, look at the move from almost like 250 odd levels back in April. It's now almost 400 rupees. Any take on this counter? Where's the stock headed? What's the outlook?
Yeah, first of all, I would like to disclose we do not have any recommendation on the stock. Having said that, I think the operational challenges continues to remain, and I think we should wait for a few more quarters in order to take a call on this. So I think it's better to have a wait and watch kind of approach for this.
That's a wait and watch, but just Sharon, if you can help us with a chart check on this one, because I can see that during the month of May, very good volumes is what we have seen. But with this sort of a move, do you still believe that the stock can rally more, or is it the time to halt now?
No, Shishti, looking at the chart price action, I think it's very strong, higher high, higher lows. It's trading above all its moving average. I think in the next couple of days, the 100-day DMA is going to cut the 200-day DMA on a positive side. Again, a very positive crossover. So I think the stock has enough legs to reach 450 to 460 levels. If anyone has a position, I would suggest a hold rating on the stock, but definitely put a stop loss of around 380 on a daily closing basis. If it closes below that, you can review it in the coming 2-3 weeks. But looking at the price action currently, it's very strong. You can reach targets of around 450 to 460.
Okay, that's that on delivery. Just looking at some of the other buzzers as well in trade. And what's really been cracking hard today is some of the capital market plays. Look at a BSE, for instance, that's down about almost 7% right now in trade. That's where BSE futures are headed. Angel One is down about 4.5%. Even names like an MCX are slashed by about almost 4% as we speak right now. That's Motilal Oswal as well. That's the other stock which is in focus. CDSL. The entire pack is looking a little bit beleaguered, as we just highlighted. Other than that, pharma is the other pocket that one should flag off right now. DRL 2.5% is the cut coming in there. You've got most other movers. Oro Pharma, look at the move on that one as well, down about almost 3.5%. But some of the mid-cap plays, interestingly, like an Ipca Labs, etc., are the ones which are holding out. Kunal, what's your observation within pharma right now?
So I think it started off with very select stocks which did well. I think you had Glenmark Pharma, which was one of the strongest one. Then it started to move into the other stocks. For example, Sun Pharma showing some signs of recovery, but it's still a lot more staggered. I think you just have few odd names which are showing signs of consistent volume breakout, and that's where the money is being money is chasing only very few specific names. You look at the other set of stocks, Aurobindo Pharma, Lupin, Cipla. I think these stocks are still showing signs of a struggle. It's more like a flatlined move for these stocks over the last 4 to 5 months, and these stocks have been hovering at a pivot, with a plus minus 5% kind of a range broadly for themselves. So that indicates that we are not looking at a major pickup on the large cap pharma stocks. But I think on the individual pharma stocks, the move in the likes of Glenmark Pharma, for example, in the last 2-3 months, the stock picking up from I think 1450, 1500 as a base to 1850 mark, which it tested yesterday. Biocon is something which has done quite well from those 325, 330 levels to now almost 370, 380 zones. So there are very few specific pharma stocks which is looking attractive. And I think that's broadly also the move which has been happening across many sectors. It's not as if that all stocks or majority of the stocks have participated in this last 500, 700 point of index uptick. So I think that's how the texture of the markets are, very selective in terms of individual sectors as well as pharma.
Okay, so that's the take on the overall market breadth and Nifty Pharma, and some of the stocks from the pharma pack that have been doing well is what Kunal has just flagged off for us. But Narendra, coming to you once again, give us your sense on the real estate updates that we've received yesterday. In line largely from Sobha and Macrotech, you have good set coming in from Phoenix, but there are no major disappointments that we've seen anywhere. This is unlike the story that we had seen just 1 quarter ago. Do you believe that it's now a turnaround time for real estate where we can see volumes meaningfully picking up?
I think definitely things should pick it up from here, especially in tier 1 and tier 2 cities. Also, the fact that the interest rates have come down significantly, and the overall economy is also expected to pick up in this second half of the current year. So I think all the things are in place for the real estate markets to show a good performance. And if we see for the players like DLF, they are able to sell premium properties. So I think the other players should also see pick up in the performance, and the new launches, pre-bookings, I think should not see any major headwinds right now going ahead for the sector.
Okay, that's the take coming in on the entire part today. I think after a hiatus of about almost 3 odd trading sessions, or rather has been buzzing for them from the last 3 trading sessions, the index has managed to gain about 2% in the last 3 days, and this in an otherwise very, very quiet market. Sharon, what are your spots if you are identifying any within realty?
So I've seen a reversal in Prestige, DLF, Oberoi, and this one Brigade. These four are looking very decent. They are showing signs of reversal, but on very small volume. If you see, volumes on the downside are quite high compared to volumes on the upside. So I will still wait for a confirmation. Given the fact that realty is a very high beta sector, any downside in Nifty can take this sector even further towards the downside. So I would still wait for a confirmation in all these stocks, and once the confirmation comes, maybe in the next 2-3 days, we can look to adding position in these names.
All right, so that's the take coming in on the realty pack. Let's watch out for that. But today, in some of the other newsmakers today, we also have some of the cement counters that are also buzzing. No significant news flow rather, but the good stock action is what we are spotting. Case in point being Grasim, Ultratech Cement. These stocks are showing momentum. Kunal, anything on the charts that you like at this point in time?
Yeah, I think Grasim could be a very good, sort of a contra bet. After the last, I think 5 days or 6 days of a price correction, the stock starts to look fairly attractive. And I think at current zone where the stock is trading around 2800 mark, it's also bounced back from its, short-term moving averages. And we look at the previous, almost 1 month of a price uptrend for Grasim. The stock bottoming out earlier at 2650 thereabouts. In terms of a minor swing low, moving up higher, making a pattern of higher highs and higher lows. So when we look at the setup over the last 1 or 2 months, it's been positive. When we look at this over the last 4 to 5 days, the price levels have come towards a very attractive price terrain. And we expect generally that if a price or the trend of the price continues, then I think risk reward starts to look attractive at a certain point of time when the price retraces back and comes back towards the mean reversion zone. I think Grasim seems to have entered into that kind of a territory. That's why I would believe at current levels, the risk reward would be extremely favorable. Would look out for 2900, 2950 as a swing target for the stock with the very near term.
Okay, that's the take on Grasim coming in from Kunal and the overall cement pack. But another stock that's doing very well in today's trading session is SRF on the back of some strong annual report takeaways that we've seen, strong management commentary coming in, wherein they have said that they are going to be pursuing both greenfield and brownfield opportunities for future expansion. Sharan, give us a chart check on SRF, given the fact that the stock is already up about 50% on a year-to-date basis. Any more legs for this stock to run up? Any more room for an upside here?
So definitely looking at the chart, once it makes a new all-time high, there is no high. You can reach at any level. You can go to 3400, 3600, even 4000. Given the fact that there was a Niti Aayog report, especially on the chemical sector, and the company itself is doing very well, has seen very good order flows from the US at least. So I think fundamentals are definitely going to change in the next 2-3 quarters. On back of fundamentals, the stock is giving a higher high, almost at all-time high today. I think if it continues that way, it can easily reach levels of 3400 to 3600 in the coming months. So a very positive chart. If anyone has a position, I would suggest a hold. Definitely keep a stop loss around 50-day moving average, around 3050 rupees. If it closes below that at any point of time, please take your stop loss and then you can review after 2 to 3 weeks. But overall, very positive on the technical outlook, and even the sector itself is doing very well. So overall, a very positive chart.
Well, a positive chart. That's the take on SRF. But look at Ola Electric as well. That's fallen now almost about 46% since its listing about a year ago. Having said that, the market does have its fair share of names which are also trading at their all-time highs. Hospitals, Laurus Labs has done very well. Max Healthcare is now sitting at an all-time peak. So look out for some of these names. And there's Fortis as well within that. I mean, who would have thought that there would be so many from the healthcare universe? So that's Max, Fortis, Apollo Hospitals, all of them sitting at an all-time peak in terms of the levels that they're currently quoting. Kunal, of course, the entire sector is doing very well, but do you think it will continue to be the case for Apollo Hospitals, for Max and Fortis?
Yeah, they would continue to be more like evergreen sectors because, historically also, so we have to analyze this in phases where, these sectors or how these sectors performed in the worst of the market conditions. That's from, say, September 2024 towards March 2025. And then in the phases post that, I think in both of those phases, at a point when the markets were going through a sharp correction, and then at a point when the markets start to show signs of recovery, when you see a consistent price performer or a sector or a group of stocks which do very well, we typically say that those are strong leadership sectors, and they are the ones where the trend and the longer term trend is intact. Because there could be two stances. One is that buyers are not willing to give up their positions, and then the other space is that sellers are not willing to sell the stock at higher levels, and they're still wanting to hold on to those names. So I believe in that aspect, many of the stocks in this space, Fortis, Apollo Hospital, these two stocks is where I track quite closely. I think both of the charts are looking quite strong. In fact, even for Apollo Hospital, I think just about last week or so, the stock gave a strong, I think, bullish pennant formation breakout, and I think post that we are looking at least a 500 to 700 point uptick into the stock price post that bullish pennant breakout. So I think that also indicates that when you see bullish patterns getting completed and stock prices adhering to those kind of key short-term support levels, the trend on the upside is intact.
All right, so that's the take coming in on some of these healthcare counters. But Narendra, the other pocket that is doing very well today is actually the whole tire space. Look at the move in Apollo Tyres, Balkrishna, JK Tyre, even Siet. These counters are anywhere up between 3 to 5%. And just a couple of days back as well, we have seen such similar moves coming in. What, as per you, is giving such momentum, or rather triggering such momentum in these counters? Is it because of compressed valuation, the raw material cost inflation coming down, and the better outlook for H2? What's your outlook on the tire companies?
I think it's mainly due to lower raw material cost coming down, and markets anticipating it should be reflected in the earnings gradually. So that is playing a part, as well as because of higher raw material cost as well as lack of demand previously, the valuations have also suffered. So I think it's a mix of both, and the overall demand scenario is also expected to improve gradually going ahead, and especially in the second half. And once the trade deal done, then the global market also seems to be improving for the domestic companies. So I think it's a mix of these factors, and that's why the markets are reacting to it.
Okay, so that's the take on some of the tire counters. But Kunal, coming to you, we've had news flow on Eternal yesterday in terms of the top management rejig happening, and today too the stock is holding up well. What's the outlook going ahead on Eternal, given that we've seen very mixed moves coming in recently?
Yeah, I think there was a phase when the stock was extremely volatile post that results. I think 250 to 200 the stock, I think traded into this zone, I think 3-4 times. Just around that, results or the reaction post results. But then post that, I think we've seen the moves settle up. I always believe that whenever the stock, changes its behavior in terms of price trends, that's where new trends emerge for stock prices. So from being at a zone where the stock was extremely volatile, extremely high beta, it's now settling into a trend for itself. Now, potentially over the next 1 week, we can expect that there should be a golden crossover where the 50 DMA may cross back above its 200 moving average for Eternal, erstwhile Zomato. So I think in that sense, this should probably push up the stock prices further over the near to medium term. And this mild gradual uptrend which you're seeing into the stock price, the momentum should try and accelerate if we see that golden crossover happening into the stock price. So bullish on Eternal. The base which was formed at this 200 to 220 range, we've seen almost 3-4 tests to that kind of a range for the stock price, and demand originating for the stock at those lower levels. So which means now we are looking at a point where the stock should gradually continue to move up higher. The pace would intensify once we see those classic technical breakouts and the crossovers, etc.
Okay, that's the take coming in on Eternal, currently a gainer in trade. But Naren, it's good to have you on the show. We'll let you go on that note. We're going to take a very quick break. It's pretty much status quo. The index hasn't moved anywhere, but let's see how the last lap of today's trade pans out. Back with closing trades, Rajah and ET now haven't moved at all for the index, but yes, individual names like Kotak, Eternal, NTPC all holding up. On the flip side, pressure from Titan, DRL, Bajaj Auto and Trent continues. But all eyes on what's going to come out of the trade deal between India and US, and it seems that India could soon be finalizing a trade deal with Washington as Trump has intensified pressure on countries by issuing formal tariff notices. Sumita Karir, my colleague, is here with exclusive details on what she's picking up.
Right, Aisha. So definitely all eyes on whether there will be a deal, whether that announcement will come tonight or not. In fact, GTRI suggests that these issues that India and the United States had, they are being worked out, and of course, a deal could come in soon. And essentially, this is what we are hearing from multiple quarters. Given the fact that July 9th was supposed to be the deadline, before that that deal should have happened. Sources also suggest that now India may have a negotiation window till August 1 if deal specifics are not really favoring India's sectors. Remember, India has put a strong stance forward with respect to protecting sectors like, for instance, e-commerce, agriculture overall, dairy, of course, GM crops as well, and of course, to a significant extent, autos as well. We are also understanding from sources that since this is a mini deal, a larger deal will be worked out, during the fall of this year, the first tranche. And this time around, there could be a possibility that India could end up paying higher levies. However, government has insisted that it is protecting its metals, autos, agriculture and dairy sectors, and in no way that this deal is going to impact the interests of its communities, industry as well. And we are also given to understand from sources that as far as autos is concerned, where the government is not very keen on reducing tariffs in the auto sector, sources have suggested that at least that will not happen, at least till the entire duration of PLI scheme concludes. And as of now, India is unlikely to offer additional concessions on ongoing trade negotiations. Remember, these alerts and these information bits that we're picking up, this is after Donald Trump announced steep tariffs on 14 countries, and that includes Thailand, Myanmar, Bangladesh, South Korea and Japan. And of course, Donald Trump has said that these tariffs will come into effect starting August 1.
All right. Thank you so much, Sumita, for getting us all those details. So a deal is indeed likely, and a lot of sectors could actually be in focus, be it from metal, auto, agriculture, some talks related and going on with respect to the dairy sector as well. So let's watch out for that. But with this, let me also welcome on board Anand Tandon, who is an independent analyst joining us on the show. Anand, hi, good afternoon and good to be speaking with you. But firstly, help us with your own sense with respect to the tariff implications on India as a market, because yes, we are waiting for the final announcement. But the trend that we have seen for now is that there hasn't been much of a change with respect to what Donald Trump announced back in April 2nd, and with the 14 odd nations, the major tariffs coming in. Do you believe this case can also hold true for India as well?
And certainly it can. I think the only reasonable tariff agreement that has happened has been with the UK, which is of course a very close ally of the US. But most of the others, they've had to kind of stick with the so-called Liberation Day tariff that Mr. Trump had announced. With India, I think while India has tried to be as reasonable as possible, I'm sure the issues will be different from when viewed at from the US side. And it is very likely that we may not get any great benefit in terms of relaxation from the US. So I think we should also gird up for a level of tariff which is higher than where we left it, and somewhere perhaps a little lower than what the threatened tariff was. So instead of 28%, maybe we'll end up with between 15 and 20% by and large on an average, but that's about it.
Okay, so that's the take on tariffs, but also help us with your take on certain sectors that could stand to benefit if the tariff announcement is in India's favor. And even right now, our Southeast Asian counterparts have been hit with slightly higher tariffs compared to what we're expecting to see for us at least. You have sectors like textiles that are doing very well today. What is your sense on this sector and the other, some of the other external facing sectors that could do well if the tariff announcement goes our way?
So there are two ways of looking at it. Either we assume that the US consumer stays where they are in terms of buying the same basket of products, in which case, India is not worse off unless the tariffs are higher than a competitor. It doesn't matter whether or not the tariffs that India pays are higher than what we used to pay earlier. But more important, the question is, which is the competitor who is supplying that? So for example, in the case of textiles, if it was Bangladesh that was taking away much of the quota-free exports into the US, maybe because of the higher tariffs there, so long as ours are not as high, maybe we will actually benefit. So from that point of view, textiles definitely looks like an area that we may get some benefit out of. The other option, of course, is that there is a down trading, that the US consumer is already very stretched and therefore ends up down trading. Here too, I think you may find that actually the developed markets may have a little bit more of a challenge, especially if quotas, for example, from Japan and Euro area continue to remain high, that India could benefit relative to the others. However, in that context, you have to assume that the overall volume will actually shrink because there will be a negative impact on the US GDP. So either which way, from our perspective, I think it looks like for most of the traditional Indian products, you may have a relatively better bargaining position, but the overall volumes may not be as big.
Pickup is what you're seeing on the market right now. We're pretty much around the session highs after doing practically nothing for the better part of today's trading session. 25,500. It's trying to pick up from that level. So Kotak, of course, is one of the key winners today. There's Asian Paints, BEL, L&T is picking up a little bit. So is the case with ICICI Bank and SBI, along with HDFC Bank and Bajaj Finance as well, which are beginning to pick up. And I guess the Nifty Bank also would have pretty much mirrored what the Nifty is doing, which is why you're seeing that uptick. SBI is seeing that spike up, and there you go. Nifty Bank at the session highs, 0.5% of an uptick is what you're seeing right now. Kunal, let's revisit the charts of the Nifty Bank.
Yeah, I think it's a very good up move, almost a 300 plus point uptick for the Bank Nifty. I was discussing this point earlier also, that I think if the markets have to move up higher, Bank Nifty has to play a very pivotal role over here. And specifically at a point where the Bank Nifty has been holding on to that 57,000 mark. I think rarely we've seen, banking index, being less volatile than the benchmark indices. And this is one of those zones where over the last, I think 1 week or so, where the Nifty scaled down to 100 to 50 points from 25,700 mark, thereabouts towards 25,450. I think the Bank Nifty has also gone through a very mild bit of a consolidation. I believe, very strongly that if the markets have to move up higher, Bank Nifty should play a pivotal role from here on also. I think what matters now is that if large cap stocks manage to just move up into another leg of price uptrend in the banking stocks, so whether it's HDFC Bank, ICICI Bank, Kotak Bank today I think has done reasonably well. So I think if we see 3 or 4 top names which comes back into those breakout modes, I think we may probably expect another 800 to 1,000 point uptick also over the Bank Nifty.
Okay, that's the move on the Nifty Bank, beginning to reflect on the index as well, which is finally picking up a little bit. But let's get you some updates from the aviation industry. And the Parliament Accounts Committee met with authorities and representatives to discuss rising airfares. My colleague Samir Dixit joins in with what came about from that meeting.
Parliamentary Account Committee held an important meeting with the key stakeholders on the subject matter of aviation sector. We are picking up from our sources that the key discussion point included the surge in airfares, Air India's aircraft crash, and also the black box recovery, the detailed investigation. And in addition to this, a special demand was raised related to the special audit of BCAS. So a couple of MPs, they raised the point that post Pahalgam terror attack, the flights operating from Srinagar to the other destinations of the country, the airfare, it surged drastically, reaching to skyrocketing prices were there on the website, which created a lot of problem for the passengers, those who were looking to move out from Srinagar, and that was not as per the standard and was ethically wrong as well, and airlines should be held accountable. In addition to this, one of the opposition MP actually raised the point that BCAS should be properly audited, and a special audit should be done so as to identify if there is any loophole that can be fixed in. Also, the Air India's aircraft crash was also taken up in this committee meeting, that what led to the accident, and in terms of safety parameters, how far we can go ahead in taking more stringent steps.
Right, Samir, thanks for all of those updates, but stay on with us. An important development is coming in from the AAIB, and it has submitted its preliminary report to the Aviation Ministry on Air India plane crash case, like you were just mentioning. Samir, also bring us up to speed with updates on this front.
Parliamentary Account Committee held an important meeting with the key stakeholders on the subject matter of aviation sector. We are picking up from our sources that the key discussion point included the surge in airfares, Air India's aircraft crash, and also the black box recovery, the detailed investigation. And in addition to this, a special demand was raised related to the special audit of BCAS. So a couple of MPs, they raised the point that post Pahalgam terror attack, the flights operating from Srinagar to the other destinations of the country, the airfare, it surged drastically, reaching to skyrocketing prices were there on the website, which created a lot of problem for the passengers, those who were looking to move out from Srinagar, and that was not as per the standard and was ethically wrong as well, and airlines should be held accountable. In addition to this, one of the opposition MP actually raised the point that BCAS should be properly audited, and a special audit should be done so as to identify if there is any loophole that can be fixed in. Also, the Air India's aircraft crash was also taken up in this committee meeting, that what led to the accident, and in terms of safety parameters, how far we can go ahead in taking more stringent steps that can further enhance and improve the safety standards of India's aviation sector. So these are a couple of important points that was raised and discussed in this meeting, and this meeting was also important from the point of view that who all attended this PAC meeting. So apart from the PAC committee members, opposition MPs, key airport operator were also part of this meeting. Airline representative from Indigo, Akasa, Air India, SpiceJet, they were also part of this meeting, and the ministry officials, whether it be from Ministry of Civil Aviation, DGCA, BCAS, AAI, they all were a part of this meeting, and now the government is looking to come up with steps. Those will help to further stringent, make the safety parameters more stringent, and much more safer environment can be provided to the air passengers.
All right, thank you so much, Sami, for getting us all those details, specifically from the aviation space. But back to the markets, great move on the benchmark indices, because it's almost a 300 point of jump. What we are seeing on the banking index, and Nifty 50 has also surpassed that 25,500 mark. But within the IT space, one of the other stocks that is doing very well today is actually Sonata Software. And Sharon, since you were bullish on the IT space, can you check this counter as well? How is this stock placed on the technical front?
So technically, after a long consolidation of I think around 3 odd months, it has given a breakout above the 100-day EMA. But still it's trading below the 200-day moving average, so still not that positive. But looking at the volume accumulation in the last 3 months, I think the trend is about to change. So the stock, if it trades anywhere above 470 to 75 levels, you will expect a trend change to the positive side. Right now, if anybody has made a position, I would suggest to keep a stop loss in the system of 390. If at all it closes below 390 on any given day on a daily closing basis, you should exit it. But given the volume accumulation, I don't think that will happen. So you can continue holding it for targets of I think 470 to 490 levels.
Right. Okay. Let's get in some more strategies as we wind up for the day. Kunal, anything that's looking good to you on the charts?
Yeah, I'll go with a Contraband HUL. I think today the stock is a little bit muted, but I think after yesterday's price action move and the stock challenging its 200-day moving average, I believe that eventual breakout could be in the offing pretty soon over the next couple of days. So would suggest a buy with 2,500 as a target, stop us at 2,350. Apollo Tyres is something which I had recommended yesterday. The stock is doing fairly well for itself, bounced back from its short-term moving averages, and today I think it's nearing a swing breakout. So looks attractive at current levels, would maintain the buy on Apollo Tyres. Targets remain at 480, stop loss trail to 460.
Okay, so HUL and Apollo Tyres looking good to Kunal right now. Sharon, what about you? Where are you placing your BTST picks?
So I like HDFC AMC, again looking like it's going to retest its all-time high. Again, a very good volume action today on back of maybe fundamental, some report had come out with a target of 6,000 odd level. But looking at the price action, I think it will retest its all-time high and can give a bigger breakout to 5,400 odd levels. My second pick will be Grasim, as Kunal explained earlier very well. So the stock has taken good support around its 20-day moving average, and I think again it's getting ready to retest its all-time high and maybe higher. Looking at the price action, so I would suggest a stop loss of around 2780 odd level or a day low around 20-day EMA with targets of all-time high and even more. I think it can easily touch 3,000 odd levels in the coming weeks.
All right, so those are the buy calls coming in from Sharan, as well as tire counters is something that Kunal is liking at this point in time. But just a few minutes before we shut shop for today, and Mr. Tandon, if you can help us understand any new theme that is looking good to you in the markets, because of late we have seen FMCG and staples posting a good quarterly updates. Select counters within the financial pack have been doing well and coming out with good numbers. So any sector that you believe can be good for now for investors to accumulate?
I mean, the market is at a stage where I guess most obvious buys are already well priced. That said, I would still argue that the financials still look quite okay. The lead banks, of course, are already doing quite well, but are likely to continue. NBFCs, you could add to the space given the surplus liquidity that we have in the system. Of course, that will mean that their portfolio will start to weaken, but at least for the next 6 quarters or so, you don't expect to see that actually coming through. So therefore, that could be an area that one is looking at. I think the traditional growth in terms of insurance, asset management, etc., also is likely to sustain. Many of the other sectors like staples, etc., are probably not going to sustain for very long for the simple reason that, if inflation actually comes under control and remains at sub 3%, your nominal GDP growth will now fall in single digits. If you are assuming a real growth of 6.5, and inflation of, let's say, another 3%, you are looking at a nominal growth of 9%. FMCG cannot grow very much more than that. And that will automatically mean that the earnings growth will be again in mid to low level single digit growth. That doesn't sustain for very high stock prices given the current valuations.
Right, okay, that's the take coming in the overall market. Of course, it's going to be all about earnings now, if not for the trade deal, which seems like it's likely. And, it's just a matter of time. Sooner than later, we will hear something on the front of what's really happening with tariffs between India as well as the US. But yeah, talk about earnings, and come Thursday, we'll already be officially kickstarting earnings with TCS coming out with its numbers post-market hours. Kunal, what's the revisit or rather read-through now on IT as a pack?
So I think it depends on how the markets would probably take the reaction post results, because right now there is a phase of lull for many of these IT stocks. Within a range, it's possible that the IT stocks may come back into breakout modes or potential breakout modes or retest of the resistances. But till the time we don't see a breakout of prices for many of the larger cap names, I think it could just be about more of a consolidative move. For example, TCS, I think over the last 2 months or so, from the month of May, somewhere the stock has been struggling to break past about 3600 levels, and it's just been grinding into 150-200 point range, drifting very gradually lower, closing in towards the 50-day moving average, and just try to trade around those levels. Infosys is also very, very similar. The stock has been trading just around that 1600 to 1640 kind of a band over the very short term over the last 3 to 4 weeks. So this indicates that we are looking at a point where the markets are getting positioned potentially of a breakout kind of a move, but I think it's always better to wait out for that confirmation, because generally we've seen that when volumes are not seen as a precursor move, the moves, they tend to fizzle out very, very quickly. So I think if we see post results volumes being on the higher side and the prices breaking out on the upside, that could be a very strong indication that we are looking at a major change of trend for the IT stock. So I think it's more of a wait and watch at current levels.
So wait and watch for earnings is the call coming from Kunal. But what exactly can we expect from IT earnings this time around? It's expected to be soft for Q1 for IT, but still better than Q4. And mid caps are also likely to outperform large caps. My colleague Pulkit, who tracks the sector closely, is joining us with what we can expect from IT companies for the quarter gone by.
With the result of TCS on 10th of July, IT earnings will start for Q1. So we are expecting the Q1 of FY26 is expected to be modest. If we talk about the mid-tier companies like Coforge, Persistent, LTI Mindtree, they are likely to outperform. But if we talk about the tier 1 companies, TCS, Wipro, HCL Techs, they are under deal ramp downs, and we are not expecting very high growth for particularly tier 1 companies, especially the engineering and research and development division that will remain weak and risky. If we talk about the demand, BFSI demand will remain to be stable, and if we talk about retail, auto, communication and manufacturing, they will be a little bit weak as compared to the last quarter. For the key factors that are influencing, the first major factor is tariff uncertainty, as we don't have the proper decision on the tariffs. So this will be from that clients are prioritizing non-discretionary spends, and they are focusing more on cost optimization. For example, if we talk about the tier 1 company TCS, so as per ICICI Securities, the Q-on-Q growth for CC is around minus 3.4%. So if we talk about tier 2 companies, the Coforge, we are expecting somewhere around 5.5 to 6.5%. Key points to watch in management commentary would be deal pipeline, Gen AI adoption, vertical wise what strategy companies are focusing on, hiring trends and margin levers.
All right, thank you so much, Pulkit, for getting us all those details. So that was the expectation from the IT space overall. But Mr. Tandon, help us with your own sense on the IT sector as a whole, because of late, the trend that we have been seeing is that the large cap companies, though they used to post decent set of earnings, but onto the stock price movement and the excitement from the investors, the major traction was within the mid and the small end. Do you believe that this trend is expected to continue this time around as well?
Well, overall, the earnings of the sector are not going to grow very, very high, right? I mean, you are, with the exception of Coforge, which is extremely bullish in terms of their management commentary, almost everything else is sub 5%. And that's the kind of growth that we are looking at on the bottom line, not on the top line. Top line year-on-year growth will be anywhere from 1 to 6 or 7%, let's say at the best. So I don't think it's a very exciting sector. More importantly, if you look at the numbers that are going to be recruited, I think that is the number that people are not focusing on. You are looking at a situation where at least the bulk of the basic code writing requirement is now being done in an automated format. And with that, therefore, you are looking at more either consulting opportunities or more upscaling kind of opportunities. What India is getting now is actually a bunch of people, which people are doing as cost takeout deals, which is not a great thing, because what they are doing is passing on their surplus people with an agreement that over the next 3 years you will hold on to them. And then, while that may show up as revenue growth right now, but over time, what are you going to do with them? Because if they're not required for coding, it isn't as if you have much use for them either. So unless and until there are greater product opportunities or IP creation opportunities in the IT sector, I would be a little wary of going in for the regular services company, which is why the large cap, while it is relatively cheaper in many cases compared to the mid cap, is not very exciting. You may want to look at specific specialist companies which are catering to either products or specific areas where they have greater IP creation possibilities, and look for them. The broad IT services sector, I don't think will do anything great.
Okay, so that's the take coming in from Mr. Tandon, but let's also understand the levels that we can expect to watch out for when market opens today. It's been lackluster for most part of the day, barring the last few minutes where we've seen a little bit of an uptick coming in on the Nifty. Sharan, you go first. What levels are you spotting for tomorrow? Can we expect to see a lackluster day given we don't hear anything on the trade front tonight?
So look at especially on the chart pattern, I think it looks like a Poland flag, bullish Poland flag, and I think it's Nifty is on the verge of a breakout. I think you can expect a small gap up opening in the morning around 25,600 odd levels. If at all we don't have any negative news, but still I think overall the market will be sideways. So just expect a small gap up around 30-40 points, nothing major. I think Bank Nifty is still much stronger than Nifty, and I think it can open around 57,500 odd levels despite because there is no negative news around the corner. And if a positive news comes after opening, I said you can expect a gap up and go rally in both Nifty and Bank Nifty.
Okay, so looking optimistic for tomorrow. Kunal, what about you? What are the levels that you would be watching for tomorrow?
So I would actually look at a new swing high for the index. So maybe 25,650 should be crossed for the Nifty. I think the setup which you've seen in the last half an hour, last 1 hour, comeback of large cap names, comeback of stocks, short covering across few sectors. I think that just about whiffs off that maybe the markets are expecting some sort of a positive indication. And I think if the global markets don't disappoint, we could be looking at say 25,650, 700 as a potential range for the index tomorrow.
European markets as well, pretty quiet there too. DAX and FTSE just very, very marginally higher. FTSE is up only about 12 odd points or so, and a 60 odd point uptick coming in for the DAX. For the CAC, it's absolutely flat. FTSE MIB flat, and Stock 600 as well is really not going anywhere. So pretty much in wait and watch mode. That's how all global markets have been. Asia, though, to be fair, perked up quite a fair bit after that initial knee-jerk reaction to all the tariffs that were slapped on Japan and other countries. So Hong Kong closed in with a solid 1% gain, and to think of it, most of these markets started off in the red. Look at Japan, 101 points up in the green is how that index actually shut shop, and Shanghai managed to scale up a good 0.7% towards close. But here's Nitin Bhasin as well from Ambit talking about what he's liking in the market right now.
When you look at the sectors, again, within the IT, where we like IT as a space, there could be some of the mid-cap IT companies which are perhaps very punchily priced for the quality of the business. There's something like a Coforge could be one, something like a Persistent could be another one, where we think that these are really, really punchily priced. At the same point in time, there could be stocks like DMart in the consumption space, where we find them very, very punchily priced, would remain away from such names. And at the same point in time, I would say even consumer durable companies like Voltas, which appear to be very punchily priced and perhaps stuck in a very, very highly competitive zone where they're unable to create value from the one business of consumer durables that they are in, or in the projects business. Those are the 3 or 4 names that stand out. But at the same point in time, in the banks also, we've highlighted before, names such as Kotak, etc., are the ones. What we don't like is themes like, I would say, defense today, which is like a talk of the town. There could be stocks such as Godrej real estate, punchily priced. Again, I would say so, though the real estate sector holds up really well.
Okay, that's the word coming in from Nitin Bhasin of Ambit Capital. But with that, only a couple of minutes left of trade. Let's start winding down for the day and take a look at where Nifty has managed to drag itself towards the end of the day. We're seeing an uptick coming in of about 0.2%, and almost 100 points higher is where we are closing from the day's lowest point, and a 60-point uptick on the spot coming in for the Nifty, now above 25,500. Sensex too, an uptick seen in the last half an hour or so of trade, a 0.3% uptick coming in. India VIX, a further cool off of about 3%, so looking good there as well. Nifty Bank continues to outperform the market, a 0.5% uptick coming in on that index, so looking very good for the banking names as well. The broader end of the market continues to remain under pressure. You have a 0.2% cut coming in on the mid-cap end, and almost a 0.3% cut coming in for Nifty small cap as well. So that is what the market texture is looking like at the day's end. From the Nifty 50 group of stocks, you have Kotak Bank on the back of a robust set of Q1 updates. That's doing very well and leading the index. That followed by Eternal, Asian Paints, NTPC, Grasim and BEL. On the other side, Titan continues to be in a free fall in today's trade, now about 6.2% lower on the back of very disappointing set of Q1 updates. That was followed by Dr. Reddy's, Bajaj Auto, Cipla, Trent and Axis Bank. If you take a look at sectorally what has done well today, it has been the day of the real estate stocks because you've got good set of updates or other inline updates coming in from Sobha as well as Macrotech, but you have a good set of updates coming in from Phoenix, so that stock is held up nicely, up 2%. You have Brigade and Prestige that have done well, up about 2.5% each as well. DLF, Oberoi, Godrej Properties, all of them are doing well, and Sobha that reported an inline set of updates absolutely flat. Following Nifty, you have financial services, banks, IT, energy, all of these sectors in the green. What did not do well today and was under a little bit of a pressure was Nifty Pharma, down about 1%, led lower by names like Zydus, Cipla, Biocon. Following that, you have Nifty Auto, Media, PSU Bank, FMCG and Nifty Metal that's barely closing on the flat line. So that is how we're shutting shop for today's trading session. Nifty above the 25,520 mark for now. We'll give that rate some time to settle, but looks like we're closing in the green for today. A sharp uptick coming in the last 30 minutes or so. But with that, we completely timed out on this edition of Closing Trades. Thanks so much for watching.